and the man in charge at the CME, Terry Duffy, Chairman and CEO of the CME Group. Terry, I know I pulled you out of a meeting to do that, to get on air with us, but thank you. We're looking at some pretty epic moves since Donald Trump became the president-elect. Are you seeing any contract trades that are at or could hit significant single-day records?
Well, I don't know if we'll hit single-day records, Liz, because it's kind of ironic. The last time we had one of our biggest single-day records was back in 2016, and what happened then? There was a gentleman by the name of Donald John Trump that became president of the United States. So, but we are seeing activity that's quite similar to the last time President Trump was elected. And so first I want to congratulate him, Vice President Vance, and the rest of their team.
CME Group COMEX NYMEX CEO Terry Duffy was partly correct. Yet this week's dip in silver and gold spot prices pales in comparison to what we saw the night and day following Trump's last U.S. presidential win in November of 2016. In the annals of modern gold price maintenance history, there's been perhaps none more egregious than the 24-hour trading period with an ensuing near 2 months that followed for the spot gold price market to the downside. Just a gander at the delayed cup pattern on this long-term gold price chart suggests the then price intervention party probably bought our slowly failing fiat US dollar dominated system a few more years. But it also cost the West more bullion at depressed spot price levels at the time. The still record high blue volume spike of COMEX gold futures trading remains Trump's shocking November 2016 win, where the spot gold price popped on the news only to get beat down for weeks and months to follow. It was a $100 an ounce intra 24-hour price swing intervention, and it was a tell at the time. The global gold market proceeded to range trade between low 1,100s an ounce to highs of near 1,350 an ounce before major central bank August 2019 Jackson Hole Go Direct currency creation plans blew out major fiat monetary bases globally. The September 2019 repo crisis followed mere weeks after, and of course the COVID 2020 fiasco followed all that about 6 months later. Of course, throughout this entire price containment channel, our supposed enemies of the BRICS took large physical gold and other precious metal bullion delivery inflows at heavy discounts to today's relative valuations. Things got so bad in March 2020 gold market that the CME Group COMEX gold futures market invented an unnecessary 400-ounce gold futures contract, which no one is trading to this day. And their reason in doing this was, I suggest, to more easily double count unsecured gold ETF metals allegedly held in London and New York, allowing them to present their fractional reserve warehouse data with the appearance that there is plenty of underlying gold to go around still. There's not. We're almost back at levels reported prior to COVID 2020 on the light green colored eligible side of the underlying reported gold fractional reserve piles, and you can see how they are dwindling. Makes it easy to suggest that when the real global rush to bullion finally comes, there won't be enough attainable bullion for delivery in reasonable timeframes nor at reasonable premiums near derivative-driven spot price points. Unlike Trump's first term, we're unlikely to be stuck yet again in another stagnant gold price channel for the next 3 years. The most probable outcome remains 3,000 an ounce spot gold becomes support in next year, 2025.
With President-elect Donald Trump poised to return to the White House, we look at the potential winners and losers under his second term as president. First up, we have gold hitting a 3-week low today. Here with our trades, Boris Schlossberg, Managing Director of FX Strategy at BK Asset Management. Boris, what do you think of gold, which has been on a run?
Yeah, gold is having a corrective day today. Natural yields are up, dollar is strong, so gold is correcting. But I think longer term, and especially against the Trump presidency, gold should be a very, very interesting asset going forward. I think some of the things that people forget is although the dollar is rallying now, Trump is really a modern-day mercantilist. And if you remember back 2016, 2018, dollar actually dropped 10%. That's very, very favorable for gold when dollar declines. More importantly, Trump really loves low yields and an expansionary fiscal policy. And both of those policy measures are going to be very favorable for gold as well. So I think gold is well on its way to eventually hitting 3,000. Whatever pullbacks we have are going to be opportunities to buy the dip. It's the new BTFD trade.
BTFD. I'm not going to enumerate with explicit words what that rated R trading abbreviation means. But the bottom line, it means buy the price dip. And judging from SD Bullion customers what they did with their bullion buying capital this week, on the sharp spot gold and silver price dip, well, that is exactly what they did. Buying at a more than 3x rate versus normal daily order flow data of late. Following up on last week's Indian gold repatriation of 102 metric tons of gold out of London, it was announced this week that India's central bank bought another 27 metric tons of gold bullion last month, October 2024. Now, me being curious about you viewers out there, I recently posed a simple 3-choice YouTube poll which got over 1,100 responses from our channel subscribers out there. And much like India's central bank, about 78% of poll respondents are still actively adding to their prudent bullion stacks at present and likely to come. Hello, this is James Anderson on behalf of SD Bullion. Smash the like button if you enjoy these bullion market updates. And be sure to visit sdbullion.com/sweepstakes to enter our free 500-ounce silver coin giveaway.
Make some room in your safe because a whole lot of silver could be coming your way. SD Bullion's Monster Box Sweepstakes is back, featuring 500 of SD Bullion's very own Silver Tree of Life coins in a Monster Box for the first time ever. This stunning silver coin is a highly detailed masterpiece featuring a hidden inscription on one of the tree branches that changes every year. So put on your best flannel and become one with the forest, and take your shot to win 500 silver trees from SD Bullion, because someone's gonna win it, so why not you? Click the link below for your chance to win.
The spot silver and gold markets traded down on the Trump election week. The spot silver price closed above 31 an ounce bid, and the spot gold price finished at $2,683 an ounce bid. The spot gold silver ratio grew to close at 85. Much like many of you out there, I wasn't deterred by the spot price dip and added another kilo koala to the stack. You see, all I have to do is look down under at their silver spot price to see where we're destined to also go. The bullish physical silver market fundamentals haven't changed, and above ground stockpiles are being rated at the moment mainly for increasing industrial demand globally. We're not talking about the future precious metal store value demand that's coming. It's going to take a lot higher silver spot prices to get long-term physical investors to sell some, if any, for devaluing fiat currency issuances to come. And the Fiat Federal Reserve cut interest rates 1/4 of another percentage point this week. This week's gold price correction timing is not lost on anyone bothering to critically think things through. What was likely lost on most in this news was that the Fiat Fed killed the following language from their report. In doing so, to my mind, the Fiat Fed has lost, quote, confidence that inflation is moving sustainable toward 2%. Fiat Fed head Jerome Powell was asked this week a few pointed political questions.
Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally you're not required to leave?
No.
To follow up on Victoria's question, do you believe that the president has the power to fire or demote you, and has the Fed determined the legality of a president demoting at will any of the other governors with leadership positions?
Not permitted under the law.
Not what?
Not permitted under the law.
In what might be his funniest line of the race, I've seen President Trump's golf swing, and for a man his age, it's honestly pretty powerful. But it pales in comparison to the power of this most recent important piece of long-term gold price trend data facing him and the global gold buying world to come. You see, the ridiculous imbalance of overcreated fiat currencies already issued and outstanding in comparison to the estimated global gold mine pile above the ground. As we are moving into a world of bullion over bonds, and perhaps the most important macroeconomic trend, trade building, gold's current global valuation in relation to 94% of the outstanding fiat currency supply regimes in the world, it still has to multiple by a factor of 4 at the moment to reach the more than 50% gold to fiat currency coverage we saw in the last 1980 Western-driven gold bull price mania phase. There's no telling how much more fiat currency issuance is going to come, with the massive unfunded liability piles in the Western world coming due in the years and decades ahead. This further gold revaluation trade has its highest probability of playing out well beyond Trump's coming second term and his remaining years slamming drives deep down the fairway. That'll be all for our weekly SD Bullion Market Update. And as always to you out there, take great care of yourselves and those you love. If you enjoyed this video, hit the like button and share it with those you love. Subscribe to our channel and hit that alert button so you know when we publish new bullion market updates.